Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain. Hello, everyone, and welcome to this week's Crypto and Blockchain Talk. And back with me, I have one of the most illustrious people that we have in the realms of trading and experience in trading on the markets, and that's pretty much all markets, as well as also he is the founder and president of Hero, which is spelled HXRO, and he is Rob Levy. Rob, welcome to Crypto and Blockchain Talk.
Thank you so much for the great introduction, and thanks for having me again. I'm really looking forward to talking here.
Yeah, we've got a lot to talk about. We are so excited that you're back because there is really no better person to talk about what's going on in the world of crypto. It's a little bit insane at the moment, isn't it?
It is insane. It's nothing short of insane, actually. But if to be honest with you, it's not quite as insane as some of the stuff we've seen in these traditional markets in the U.S. stock market right now. There is stuff where you see a ticker, someone post a ticker on Twitter, like with the cash tag GME, and you're like, what, did Binance just list that? Like, why is that thing up 8x in 2 days? And then you look again, and it's some U.S. stock that of a kind of an analog game company that is not performing well, but the stock is. I mean, it's really, crypto is, we're used to it, I guess, because we're here in this market where crazy tends to happen almost on a daily basis. But it's not supposed to be that way in the U.S. stock market, or at least that's what everybody thinks.
Well, absolutely. It's not supposed to be. And I think this is going to be a really interesting way that we're going to have to try to structure this podcast, especially so that people can get their grips on the topic and to really understand what's happening here. But what this week's topic is about is really this thing, I don't even know what to call it, that has appeared. And I need to explain this as well. This thing that's appeared with WSB, which is known as WallStreetBets, which is this new coin that apparently gained in excess of 130% in 24 hours with this like daily trading volume of 100 million US dollars. But I think what people need to realize is that this is actually a joke. And I don't think people understand it's a joke, because I'll tell you why. First of all, because we've had actually people emailing us and they're saying, what is this WallStreetBets thing? And then we have to draw their attention to a number of things. First of all, the fact that there's a 0 in front of it on CoinMarketCap. The second, if you actually click on it, you can see it's an ad. It's an advertisement. It's basically, it is a joke. But is it a joke? Because this is one of the first things I want to talk about before we talk about also what's happening with Robinhood, and also just something else I want to get to eventually in this week's podcast is with all of this activity. They always say in the world of PR, any news is good news. It doesn't matter how it's hitting you. If you're a star, if it's bad news, it's still good for you. If it's good news, it's good for you. I'm not so sure when crypto and other things that touch crypto have such extreme volatility, even like Bitcoin. Bitcoin's been going up and down by the thousands today. I mean, I looked at the market today 4 times. Yeah. It was at 38, 35, 32, and I don't even know what it's at right now. All of this movement, I can't think that the SEC is looking at this and going, yeah, we're going to take this seriously. Not. So I guess let's do this in some kind of order and try to make sense of it. And like I said before, Rob, there's no better person than you to put some magic sparkle on this and make the listeners understand what the hell is happening. So
Absolutely.
let's cut into this.
The point you just brought up about Bitcoin's price right now. And the price of Bitcoin has been in the past 24 hours, really kind of in the past 12 hours even, we've seen a almost 20% increase in the price, and that was sparked by an Elon Musk tweet and a changing of his Twitter profile, which took Bitcoin up about from its low $7,000 higher, so a little over 20%. And we're seeing starting mid-morning Chicago time here, we're seeing a pretty sharp sell-off, and it's now more than 10%, almost 15% off the highs that were made this morning. So that is extremely volatile. But this goes back to something that we discussed in last week, or about the market structure of Bitcoin right now. Once it broke that $20,000 ceiling that had been there, in 2017, and then it was kind of acting as resistance here at the end of 2020 and beginning of this year. And when it finally broke through there and was in this price discovery mode and went from 20,000 to 42,000 in relatively short order, the structure of this market changed in a big way. The order books are much thinner here. There's not nearly as many limit orders that are sitting in the book from big players that maybe have been there for a while, which is what usually happens in a market that has a range that it's been in for a certain amount of time. When you're in this new range, this is volatile, and I think we spoke about how there could be thousands of dollars of air pockets, is what I like to call it, because it will not take big orders to move the price a significant amount, because the liquidity providers, the professionals, no one's drawing their line in the sand. Everyone is more nimble up here. You're not going to provide a ton of liquidity at a given price. You're going to provide small amounts of liquidity and see if there's an axe in the market, if someone really has a lot of money to move, either on the buy side or sell side. So I expect this sort of action and volatility to continue for a while. The only thing that can kind of stop that is if there truly is an influx of a tremendous amount of capital into this market, and its risk capital, market makers that are willing to provide bid and ask that are thick, but it's so risky that it will take a tremendous amount of that capital in here on the liquidity side to keep this thing from moving $3,000 in an hour if it wants to.
This craziness that you kind of just encapsulated and the volatility with Bitcoin, it definitely matches what's happening with the stock market frenzy around GameStop, which apparently has been years in the making. And it's also reflected the growth of two online communities. Basically, the users of the trading app, the stock trading app, Robinhood, and members of the Reddit message board, WallStreetBets. Okay. Yep. WallStreetBets, the one that we referred to at the beginning of this podcast with the acronym, or the coin acronym, WSB. Now, I know that this has caused a hell of a problem. And it's quite interesting when you're looking at this because, like I already said, it's making many people a little bit nuts. Now, one thing you and I did see today, Rob, was a video where one of the major networks was interviewing Dave Portnoy from Barstool Sports, and he was talking about how Robinhood, there needs to be some really severe accountability for limiting orders. I need for you now to explain, first of all, why limiting orders is bad.
Well, limiting orders is not only bad, when you're doing it on just one side of the market. This is why Dave Portnoy and why some other people are like very, very quick to throw out a word criminal. And I mean, those are real strong allegations. I'm not going to make any of those sort of allegations. Those are very, very strong allegations. And without really knowing the facts here, I think it's a little early and potentially a little overboard to be making those sort of allegations. Mm-hmm. But the bottom line is people are up in arms because Robinhood users and customers were unable to buy the GameStop stock. They could not buy the stock, but you could sell it. So if you had inventory in certain aspects, they automatically entered orders for people that automatically sold out of their position. We don't know yet if the institutional customers were able to sell and buy. We don't know anything like that, but what we do know is on the exchange, the New York Stock Exchange, people could both buy and sell GameStop. The stock was not halted. We see stock halts before if there's news pending. I mean, there is a process for halting the trade of a stock. But when someone tells a customer you can sell this stock but you can't buy it, let's think about what that does. If you are not letting anybody buy something and all you're doing is letting people sell something, that's an artificial power to move the stock price down, right? Markets are made by matching buyers and sellers, and anyone can buy and sell at any time. Now, if you're telling people you can only sell and you can't buy, the natural inclination is that the price is going to go down, and it could go down a lot. So that's why people were up in arms, more than just like not letting anybody trade it at all, but the fact that they limited buying, said you can't buy, you can only sell. That's a problem. That's a real problem. I don't think that flies in any sort of market at all. And I think that was just the wrong policy move. I have an idea of why they did that, why they chose to do that, why they had to do it. Quite frankly, Robinhood is a broker, right? They're not an exchange. They're a platform. They're a broker. They let you place orders, and they put those orders in through their liquidity providers, and they get fills. But the stock market still operates on this T+2 or T+3 settlement system, where if you buy a stock through your broker, you don't technically own that stock for 2 or 3 days until it goes through the entire settlement process. Now, this is one of the things that these crypto exchanges have solved. It's a much better settlement process than a 2 or 3 day settlement process. The crux, the problem here is that there was such a massive inflow of buyers of GameStop stock. And if such an inflow of buying power comes in, and it's in such a short amount of time, Robinhood has to cover the funding for those positions. They have to have enough capital, or they have to have a certain amount of capital to cover that 2-day float or 3-day float. And because this influx was so strong and so sudden, they're all of a sudden looking at, and I'm trying to do the math and put it together, how much it could have been if it was $1 billion that they had to have backed by capital, or if it was $2 billion. I think it was about $1 billion, maybe even less. But I believe they simply did not have the capital on hand, the real-time liquidity to support the inflow of buyers. So then what could they do? They needed to raise money quickly, and they did. They had credit lines of, from what I've read, $500 to $600 million for margining and these sort of requirements, but that must not have been enough to cover this. So then what do? I mean, if you're trying to solve a math problem and you're like, holy cow, we have such a massive imbalance of buying. There's been 1 million of our customers have bought GameStop, and we've only had 10,000 customers who have sold it. So they've got such a massive imbalance that naturally you say, okay, how about if we don't let people buy this anymore and only let people sell it, and even force some people to sell it? That is a very simple way to try to cauterize this gusher that they had. and this need for immediate capital. And I think that was the absolute wrong position to take. I think we saw the big hedge fund who was on the other side of this, like Melvin Capital. They immediately went. They knew that their nuts were kind of in the ringer. They immediately raised $2.7 billion so they could try to stay in the position longer. It's Robinhood who needed to immediately raise $2 billion to make sure that they didn't have to do anything crazy, which I think could potentially really harm their business.
One of the other pieces of news that I read today was that Robinhood was hit with a class action suit, but apparently the word out there is that it's likely to fail. And this suit is based on the allegation that this app had punished retail investors and manipulated the open market when it tried to restrict the GameStop surge. But doesn't it seem like people get away with murder sometimes, and that there's a really good chance that Robinhood will be one of these? I
think that we very well might see that their terms of service allow them to do these sort of actions. I think that is probably the case here. Now, because someone accepts your terms of service and they can do certain things to either protect themselves, or it doesn't even say why, they just are allowed to do certain things, that might lead people that you've heard to say, well, they'll be fine in this class action. They didn't break the law technically. And we don't know if they did break the law technically. They might not have. But what they did was lose the trust of their users. And they lost the trust of potential users. And they created a situation that was, I think, going to be looked back upon as truly they made a bad decision, and it's going to cost them a significant amount of money. Trust is hard to regain, and that's one thing that's going to be an uphill battle for them, because the optics on this are ugly, and there already is this distrust for financial institutions, and it's kind of the timing of it, not great for Robinhood. Really not great.
Now to connect Wall Street Bets with what happened within this whole Robinhood saga. A huge backlash was by the WSB, the Wall Street Bets people, the Wall Street Bets users, and others who believe that the brokerages are siding with like hedge funds short sellers. And basically there was a huge backlash by the WSB crowd. Now, the WSB crowd, the Wall Street Bets crowd, is basically a community of online day traders. And they actually helped propel the shares of GameStop, who is a U.S. video game retailer, up over 2,000% this year. I don't know. It's apparently a joke of some kind, or maybe not a joke. It depends on which thread you want to read. But obviously it's completely serious, because we're talking about real money, real people's investments. And if you look at what you were talking about in the last podcast we did with the saga of Hertz, where they filed for bankruptcy protection earlier in 2020 because of the COVID pandemic. And then all of a sudden, Hertz's stock price grew tenfold in a matter of weeks, despite the company being bankrupt. And of course, they were ultimately delisted from the stock market in October. This is the kind of play that was used with Hertz. What this crew did with GameStop is kind of the same tactic that was used with Hertz, isn't it?
I don't think it's the same tactic. I think that this particular situation, to me, the thesis behind this trade, this goes to something that we spoke about in our previous podcast when you asked me about liquidations and what do they mean? Do they scare you? And I explained that liquidations are showing that there's too much leverage in the system, or that people are too one-sided. So we talk about these cascades of liquidations that could really move the price when people are liquidated out of positions and they're forced to close them. So it's the same sort of idea where I spoke about the wheat market. And when all the funds have a record short position, that's when it's not time to be short anymore, and it's probably the best time to be long. So that's the same exact thesis behind this trade, and it was a smart trade. Now, how this trade was advertised and promoted and what the masses ended up doing with this thesis is another story. But the trade itself, there are so many smart people out there who do know how to look at markets and know how to extract value. So a smart guy said, there is a big fund here that is building a big bet against GameStop stock. They have a big short position. Short positions of that size, they're reported, and you get to see and follow along with how much of an asset is shorted. So certain people are tracking this, and they're noticing this big short interest increase on GameStop. Now, what that does, it displays a vulnerability and kind of like a weakness in the fence. And you're testing different areas of this fence. And a huge short position, it's a vulnerability, because if something positive was to happen to cause that stock to go higher, it can get very, very uncomfortable for the person with the short position. And if that person with the short position has to cover their position and has to buy back those shares, they can add a significant amount of fuel to a fire of an already rising price. So they saw this fund had a big, big short, and one guy said, this is the time to buy this thing when it's got a massive short position in it. And in the WallStreetBets chat room and on Reddit, they all kind of start talking. And one guy says, look at this. There's this massive short interest on GameStop. I think there's an opportunity. And that starts spreading. And people start putting out that, it starts starting to social media on WallStreetBets on their forum and elsewhere. GameStop, massive short interest, looks like it could pop. And then that just kind of starts building and building, and more people start looking at it, and they're like, wow, that's kind of a really big bet to have on the short side here. It wouldn't take a lot to cause some pain to this guy. And that's exactly what happened. It starts with one guy who notices it. It starts spreading. When you've got a big social media forum like that, it can spread like wildfire. And that's really what happened here. And I think the quote-unquote stupidity or the missizing of this position really was the downfall of the $12 billion fund who put the position on. I mean, it's just too big and couldn't manage it once it started moving against you.
Absolutely. Now, I want to just paint a very vivid picture for all the listeners, because there's a post on Melvin Capital. They're one of the most prominent of the GameStop short selling hedge funds. And a poster wrote on there, "You're a firm who makes money off of exploiting a company and manipulating markets and media to your advantage. I dumped my savings into GameStop, GME, paid my rent for this month with my credit card, and dumped my rent money into more GME. This is personal for me and millions of others. I'm making this as painful for you as I can." And then, right after this, Robinhood would stop trades on GameStop. But then 10,000 comments later, after Robinhood said that they would stop trades on GameStop, as well as also, by the way, AMC and Nokia, the users of WallStreetBets were saying things like, I'm going to switch brokers and buy more. I can't believe how hard they're trying to F the little guy. Now, you would say that it's not really clear how this is going to end, but a statement just came out by Elizabeth Warren, who slammed the SEC right now, as we're on air, over the GameStop chaos. And she basically blamed the SEC, which is really weird because it was one of my first statements when we went on air. She's blaming the SEC for its failure to act on the blitz of market speculation. And this second statement is right on the nose of the next thing I want to talk to you about. She said, we need an SEC that has clear rules about market manipulation and has the backbone to get in and enforce those rules. And this is ongoing as people are right now protesting to Robinhood's move to curb trading and the whole GameStop and AMC thing, and God only knows what else in that whole realm, and exactly what we've been talking about here. I mean, there's clear rules about this, isn't there?
The U.S. has the most stringent rules on market manipulation.
Obviously we're not.
We're going to talk. No, we do. I mean, there's no question. We do. It's. I mean, we could break it down and ask about what is the manipulation. Now, we know that like pump and dump schemes, that's manipulation. You can't do that. You can't be in a forum and be trying to get pump and dumps. right? Where you have a big position, you pump it, and then you're dumping it on the people that you're trying to get to buy it. Like pump and dumps, you can't do. This is different to me than a pump and dump. And then if we're talking about the manipulation on the other side of things, now it gets that's a more involved discussion. I come from the world of being a market maker on an exchange where the ability for market makers and liquidity providers to short things, to sell things that they don't own, is necessary for really efficient and liquid markets. If I couldn't sell futures or calls or puts to a farmer who he wanted to price some of his corn 3 months out, what would he do? Markets do not function with just a spot market where it's literally just you can buy or sell and there are no other positions. The derivatives markets, they work. Now, the problem here is that this particular fund was taking a big short position on GameStop. And it's because they felt that the stock was relatively overvalued against what they felt the future discounted value of cash flows. Their valuation metric told them that GameStop was overvalued relative to other assets in the market. And they took a big short position. Now, we've seen people come out like Elon Musk and even Mark Cuban and big guys who say that funds shouldn't be able to build these sort of big short positions that could potentially drive businesses out of business. And, Elon Musk thought that these funds were trying to do that to Tesla, and he was able to come out of it. Now, that's an interesting statement. I don't think predatory action like that is ethical. I don't. There could definitely be limits to the amount that a fund could short. And, when I was at the Board of Trade and the CBOE, we did have position limits. There were clear position limits on how much you could be long or short of any asset. So we had limits. So that's the first question is, are there any limits for a fund like this? But I do think that the U.S., they regulate their markets as well and as strictly as anybody. But the question here is, who's the most at fault? A lot of people think the pump and dumpers are at fault here. And obviously the masses believe that this big hedge fund was preying on GameStop and have this big short position to try to put them out of money, out of business. I don't know if it was that nefarious, but short positions like this have happened for years and years, and it ends up being a battle that's played out in the market. The best thing about the market is it's an arena for big players like that with deep pockets. They can fight their battles in the market. There's such things as hostile takeovers where someone wants to buy a company, that company doesn't want to be sold to that guy, and that guy says, well, F you, I'm going to just get in the market and buy all your stock up. See how you like it then. It's the arena where stuff like that happens, but you have to put your money where your mouth is. Now, when you start disabling certain sides, you start not letting people buy something and only sell, then you get into serious problems. But Elizabeth Warren's statement, I don't think she has full understanding of the markets and of what is the manipulation. What is the manipulation she's referring to? The short selling? I don't know.
What I will say is that Robinhood right now is still severely limiting trading. And GameStop holders can still only buy one additional share. It's up 200% so far this week. AMC looks like it's risen about 145% this week. And headphone maker costs has gone up 1,100%. I think my question, there is only one question, but how do you know who's manipulating the stock at this point? How do you know who the operators are? Because you can also reflect this back onto Bitcoin. And if you do an overlay of Bitcoin and Tether, I would ask you even the same question there.
Yeah, I think that's kind of a different mechanism at work. I think that in the stock market, there are reports that institutions have to file, right? You see that there's like 13 Fs. You're like, oh, looks like Warren Buffett took a big position in Apple, and all of a sudden Berkshire Hathaway owns, 1% of Apple, and because they have to file it when the size of a position gets to a certain level. So I think we can go through and you can go see if there's any manipulative activity. The big things that are like manipulative in real time in markets are spoofing, people flashing big orders and without the intent of actually filling those orders, saying, oh, I'm going to flash that I'm going to buy $100 million worth of Bitcoin on this order book so that all the other robots and market makers that see it think that, oh my God, some guy's about to buy $100 million worth of Bitcoin, and they'll just pull their offers and they'll run the price up ahead of it. And then that spoofer can sell into higher prices. That spoofing is very, very much monitored and very much punished. That's true manipulation. Manipulation when it comes to people putting their money into an asset, we have to ask ourselves, when does that become manipulation? When they're risking their money, their own funds, to own something. If someone wants to come in and sell it and the price goes down a lot, that person loses. So what side is the manipulation on? I think people are going to be looking at this short selling situation.
Okay.
And people are going to be asking for short selling limits. Some people are probably going to ask for short selling bans. I think that is a terrible decision. There is a process for selling things short. You have to borrow it first. There is a rate that you would have to pay to borrow that asset. And as that asset gets more and more demand, even to borrow it so people can short it, the price to borrow it goes up. There is a whole process here. We see that in a better way in crypto as well. But all markets have this funding mechanism. That funding mechanism occurs in this borrow-lend rate, or in the futures market and derivatives market, this funding mechanism occurs through the futures term structure. You look at the March future, the June future, you look at derivatives out along the timeline, and you can calculate what the funding rate is, what the risk is in those assets, and you can put those positions on without a problem. And it works. I think what we're going to be dealing with is a moral question here. And I think that people who are experienced and have been in markets for years and years and understand the mechanics will tell you short selling is necessary for these markets. Now, coming up with limits and different throttles on it, that might make sense. They already exist, but I would say dialing those in. But to completely ban short selling, I think is a big mistake.
I agree with that. Absolutely. Robinhood didn't just limit buys on GameStop. They also limited some crypto transactions after Dogecoin spiked. Now, this is another one of these interesting things, and it goes to show you actually, and this is again another debate on social media and the influence on everybody around the world, because all it takes apparently is for Elon Musk to say something, and he's already been in trouble with the SEC, as we all know, about talking up his own company's stocks. But obviously he's allowed to do whatever he wants on Twitter and all the other social media platforms, and he tweeted out a picture of a magazine cover of Doge, which is like a play on Vogue. And the post showed a picture of a dog, which many Reddit users took as Elon Musk supporting Dogecoin. So Dogecoin, which was created in 2013 based on, it was a joke. This one, again, I know we're using the word joke a lot in this podcast. I don't think I've ever said the word joke in a podcast. And it's now soared over 800%, making it the crypto equivalent of GameStop. So I just wanted to get your thoughts on what's happening around Dogecoin.
Dogecoin is, I use the term meme coin because it's such a meme in crypto. And like you said, even the founder of Dogecoin says this was a meme, it was a joke. And the developers are not even really working on Dogecoin any longer. I mean, it really is kind of a joke, but doesn't mean that joke doesn't have value to certain people. And what I would imagine happened with Doge is that the liquidity providers, because of when you see a tidal wave coming your way, you got to get prepared. So I would imagine, I think we could probably go and check the blockchain and start looking through the block explorer and see, like, were there big purchases of Dogecoin like on exchanges that then big blocks of coins were moved to accounts like on behalf of Robinhood or wherever they custody those coins, where they just needed more Doge to support the influx of buying of that token. So I would imagine that we saw some really big transactions on that blockchain where millions and millions of Doge were moving to the custody of wherever Robinhood or their liquidity providers hold those tokens. That was a major, major tidal wave of money flow. I think that it is not the smartest flow of money, but who am I to say that? The people who jumped on it first, who connected the dots and said, you know what, this kind of reminds me of crypto. Let's go after a meme type of coin. Doge is at the top of the list. I'm in. Some of those people made 5 times their money if they sold it, 10 times. If they sold it, they traded it well. If they didn't sell it, then they've got risk on the table. And is Dogecoin worth 5 cents per coin? There's other stuff that I would put my money in that I think has a better chance of really gaining value in the future other than Dogecoin. But for that trade, it was a good trade. It's hard to tell people that they made a stupid trade when they won on it. It could be a really stupid trade, but if they won on it, they won on it.
Absolutely. You're completely correct. You know, Dogecoin added $7 billion to their market cap in 24 hours. Okay.
It's insane.
It is insane. Of course it's insane because, I mean, I'm not being funny. When did you pay something with Dogecoin, or when was the last time? It's so surreal.
This is the world of markets. Markets are...
Is it the world of markets, or is this the world
Absolutely.
of pump and dump? You don't think this is the alarm for pump and dump? It's not the pump. I shouldn't play the alarm for pump and dump? No.
I don't think this is like a coordinated pump and dump. There are so many messages in that forum going on. I don't think this is okay, we're buying it now, we're going to pump it up and then dump it here when it gets to 8 cents. Or this is an every man for himself game out there, and it's a war. And the beautiful thing about crypto is you don't have to really deal with any of the BS with any of these intermediaries like Robinhood or any other brokers or anything. You know, your account on FTX or on Binance or Coinbase, that's your account. And if you're buying your coin, it's yours. And that's the beauty of crypto. And I think that piece of settlement and of trade and exchange of value, that's going to be adopted by the traditional financial institutions. This T+2, T+3 settlement, it's for the birds. I mean, it's just old. And we're going to be seeing, this is what's so exciting for me, is I think that the events of this last few days has truly accelerated the upcoming adoption of the crypto industry, the technology, the applications that we're all building and that we've all been so excited about. I think we've been accelerated. I think that we're going to have a stronger tailwind behind us now. I tweeted this morning, I think it's going to feel like the jet stream, because people are going to understand now what the problem is. They're going to dig into what happened with Robinhood and see what the issue was with the funding and the T+2 settlement and all that garbage, and say there's got to be a better way. And then they're going to say, oh, you know what? They're building a better way, and it's actually working already. And it might not be scalable to 5 billion people yet, but it's surely scalable to 25 million to 50 million, and it's getting better and better and better. And I think that's the beauty of all this for us, for the people who have really dedicated their last several years of their life to build in this industry. You know, there's not right answers for a lot of this stuff. I just think it's the most wildly bullish thing for DeFi. It's the most wildly bullish thing for crypto in general. So I just am feeling like warmth inside my heart and mind and body, because I feel like we didn't need validation, right? But it's always nice to get it and to see when pulled back and see the Wizard of Oz back there. I feel like we're getting a look into some of the inner workings that either had not been getting a lot of attention or were just not thought about because there really weren't such major issues. But this is an issue that it's going to be looked upon as an inflection point. And I firmly believe these markets are not just pump and dump places. Like people are putting real money up. There are plenty of bad actors, believe me, plenty. And there will be bad actors till the day we die and then for generations to come. That's just natural. There are bad actors out there. There are people looking for shortcuts. There are cheaters. Hopefully the system can sniff them out. There needs to be surveillance. There, spoofing. There shouldn't be allowed. There are things that they need to be surveilled. They need to be monitored closely, and cheaters need to be thrown out. Cheaters need to be banned. These crypto markets are not all pump and dump markets. The pump and dump action you see, that's what happens in extreme volatility when liquidity dries up, when you get such influxes, such imbalances of volume, and when volume gets much bigger than it either has been, markets aren't prepared for it. All these big players, the Citadels of the world, the Jump Tradings, the Alameda Researches, the Jane Streets, all these players, they don't always just have endless amounts of funds ready to tackle a crazy market that just exploded. It takes time. It's like you got to prepare. You got to move money there. You got to move collateral. You got to get ready. And, for the people who didn't know that a bunch of millennials were about to buy 1 billion Dogecoins, they don't have 1 billion Dogecoins just sitting there in inventory, right? They got to go source it. We just saw this movie play out with GameStop, with AMC, with Nokia. If they come at this with that same fury, we got to go buy a lot of Dogecoin so we have inventory to sell it once it's 6 cents, 7 cents, 8 cents. And that kind of drives that beginning piece of the wave. Is in crypto, when it comes to pure token trading, you can't sell what you don't own. In the spot market, you need inventory on the exchange to sell. If you don't have it, you can't sell it. It could get to the point where there's no more Bitcoin on exchange to buy. And what happens then? You got to go source it. And if all the physical Bitcoin's all in everybody's cold storage everywhere, where are they going to find Bitcoin to put on the exchange to sell? And that's when you get really freaky price action. But I'm sure that was part of the beginning of the Dogecoin move. And it is, derivatives change things a little bit.
Well, all I can say is stay tuned, everyone, because the ride has only just started, and I have a feeling there's a lot more that's going to come from this space. So I guess, Rob, until we see the next chapter in this book, I want to thank you so much for coming on to Crypto and Blockchain Talk and helping me dissect what's going on with Robinhood, WallStreetBets, Dogecoin, Elon Musk, and God only knows what else we've talked about.
What a time to be alive. Right? I mean, we got the richest person in the world who's tweeting about Bitcoin. He's plans on taking us all to Mars. He's like, honestly, one of the biggest influencers. And he's taken this personally because he feels like the big hedge funds tried to put him out of business. So he's got an axe in this, and we're seeing other people. Like, this story is going to continue. We really are. We're living through some historic times in the market here and in finance in general.
Yeah, and it's only going to get crazier. But like you said, what a time to be alive.
What a time to be alive.
Oh, man. Okay, well, I'd like to thank everyone for tuning into this week's Crypto and Blockchain Talk. Remember to tell your friends and family to listen to us by picking one of the many platforms that we stream Crypto and Blockchain Talk on. You can find the full list, including iTunes, Podbeam, Spotify, SoundCloud. There's an entire list on cryptoandblockchaintalk.com. In addition, all of these podcasts are streamed on our sister radio station, Crypto 24 Radio, where not only can you hear these podcasts, but breaking news and also some crypto-related music. You can also get in touch with us not only by the normal social media platforms and by messaging us, but we would really like to hear from you directly by emailing us at education@savvydigital, that's education@savvy, SAVII digital.com. Again, thank you for tuning in. Remember to never, ever invest more than you can afford to lose. Do your homework. Never listen to anyone and don't be a sheep. Just invest the way that you think is most comfortable for yourself. So be well, take care, and goodbye.